Good day. I hope everyone is having a lovely day. Today we're dealing with budget, an important topic for most of the businesses and individuals. It helps businesses to manage costs, right? It helps businesses to know whether are they far from running the business effectively and efficiently, or are they on track with their budget. So, okay. For you to understand this is that when you're asked to prepare a budget, you ignore all the actual cost because if you're dealing with budget. So you're gonna look at the standard cost, which is known as the budgeted cost. Okay. So now let's read. Couch Queens Pty Ltd manufactures an inexpensive sleeper couch and uses the standard variable costing system. So variable costing system, basically, you need to understand what it means. So basically what this means is that fixed costs do not form part of closing stock. All it means is that fixed costs do not form part of closing stock. If it was an absorption system, fixed cost will form part of the closing stock. I hope we all agree on that one. Okay. CQ supplies large retailers who add their respective profit margins when selling to the public. Okay. The financial manager at CQ has provided you with the following budgeted information for the year. Production volume of couches is 100,000, sales volume. So this is an indication that what they sell is what they plan to produce. What they produce is what they plan to sell. Either way, right? So from this, you can conclude that there are no opening or closing inventory because of the budget to plan what they're going to sell. Understand? So they budgeted to produce 100,000 units, and therefore they are budgeting to sell 100,000 units. So therefore there can't be any closing stock, right? And therefore we won't take into account fixed cost for the closing inventory. You understand? So this is a simple question because of all your costs would be part of cost of sales. So I think I'm losing you guys on that one, but let's do an example and all of you guys will understand. Okay. Okay. So now let's say the required says prepare the budgeted statement. Let's say we are asked to prepare a budgeted statement. We are preparing a budgeted statement. Okay, now let's start sales. Right, sales is 100,000. We multiply by the selling price. Right, multiply by the selling price of 950, which gives us 95 million. And therefore now we are looking for our cost of sales. So we don't have any opening balance. We don't have any opening balance, but we do have material, we do have wages, and these are direct costs. So this will form part of the cost of sales calculation, and this will not form part of the cost of sales calculation. So now we know that, okay, a frame requires 20 kg and 1 kg is 5 rand. Okay, therefore we take the 20, multiplied by the 5, then we multiply it by the 100,000 units. Okay, right. So this gives us an amount of 10,000. So let's say frame 10,000. I mean 10 million. Apologies for that. 10 million. Apologies for that. Then fabric. Fabric 10 kg at 8 rand per kg. So therefore 10 times 8 times 100,000. So this gives us 8 million. Right. And then now let's do labor. Direct wages 4 hours at 30 rand per hour. So 4 hours at 30 rand per hour. So basically also you're gonna do the same thing. It would be, let me do it here at the top. 4 times 30 rand per hour times 100,000. So this gives us 12 million. So therefore wages are 12 million. Therefore, our cost of sales would be the sum of this. Since they are not losing stock, so there's nothing to minus. So therefore, our cost of sales would be 30 million. Okay, then we are using the variable costing system. Therefore, we can say contribution. So therefore, contribution is 65 million. Right. Okay. So now, our fixed cost, right? Let me use a different color for them. Our fixed manufacturing costs are 10 million, right? So obviously fixed costs are 10 million. And non-manufacturing cost are 2 million. So non-manufacturing cost are 2 million. And therefore, there are no further costs. Therefore, our profit would be the sum of these calculations. So therefore, the sum of this would be a profit of 53 million. And therefore, this is how you prepare a budget. It's not quite strange. It's simple, straight to the point. This was an easy topic, or an easy activity rather. I'll do a challenging one later on, and then hopefully by the time you watch this one, it will also be on the channel. Okay, thank you for your time.